Welcome to today's market report. European shares rose for a third straight session on Thursday as hopes of a large stimulus are under incoming US President Joe Biden and upbeat Chinese export data boosted sentiment. The pan-European stock 600 index rose 0.3%, DAX was up 0.3%, whilst FTSE 100 gained 0.1%. Global markets extended gains after CNN reported that Biden could spend $2 trillion in stimulus, which is more than market expectations. Meanwhile, data showed Chinese exports grew more than expected in December as coronavirus disruptions around the world fueled demand for Chinese goods. Carrefour fell 6% after the French government raised concerns about its takeover by Canadian convenience store operator Alimentation Couche-Tard. Chip makers received a boost after Taiwan's TSMC posted a record-high quarterly profit due to demand for devices requiring high-end chips. Semiconductor equipment makers ASML and ASMI jumped almost 4% after Barclays boosted its price target on the stocks. The US House of Representatives Wednesday voted to impeach President Donald Trump, making him the first president in US history to be impeached twice. Trump was previously impeached on 18th of December 2019 on charges of abuse of power and obstruction of Congress. Over the past 3 weeks, Pfizer, which has jumped by over 18% over the last month, and Moderna, which has skyrocketed by over 630% since the beginning of the year, have sharply improved market sentiment. Investors are less worried about rising COVID case numbers and lockdowns and are instead looking further ahead to when the rollout of vaccines can put the coronavirus behind us and growth will return to the economy. Oil was down Thursday, with investors weighing the ever-rising number of COVID-19 cases and the impact for fuel demand against a fifth consecutive week of declines in US crude oil supply. Brent was down 0.16% to $55.97 per barrel. WTI edged down 0.15% to $52.83 per barrel. Both benchmarks remained above the $50 mark. Gold was down on Thursday, with investors waiting details on US President-elect Joe Biden's plans for further stimulus measures. Gold futures were down 0.85% at $1,839.20 per ounce. On the FX front, the GBP-USD pair has been torn between optimism about the UK vaccine rollout and the US stimulus hopes. Tentative signs of Britain turning a corner on the second wave may boost sterling, but a new attack on 137 might succeed. Coronavirus cases have been dropping from the peak, providing hope that deaths, which have hit record highs, will decline as well. The decline in infections would also alleviate pressure on overstrained hospitals and caused by the opposition for even tighter restrictions. The UK vaccination campaign continues at full speed, hitting 4.52% of the population, the highest in the Western world. Investors are looking beyond the current misery and to the future. The faster a country inoculates its population, the quicker the economic recovery. Jerome Powell, chairman of the Fed, speaks later in the day, and he may opt for taking the other direction, gradually tapering down the bank's support as the economy needs less of it. His colleagues at the Fed have been mostly rejecting the option of purchasing fewer bonds, but the focus on optimistic forecasts is supporting the dollar. Soft resistance awaits at 136.70, which was a swing high last week. Critical resistance is at 137.05, the multi-year peak attacked twice in 2021. Further above 137.30 and 138.30 await cable. Cable has supported at 136.15, the daily low. It is followed by 135.45, a cushion from last week. The euro-dollar pair is currently testing support from recent lows between 121.30 and 121.50. Rising political uncertainty in Italy is expected to have a limited impact on the common currency. Therefore, economists at MUFG Bank forecast euro-dollar trading within the range between 120 and 125 over the next month. Yields of the US 10-year reference appears to have met strong hurdle in the 1.18% area on Tuesday, sparking a corrective downside soon afterwards. Market participants continue to gauge the recent dovish tone from some ECB speakers. The dollar index was down at 90.302, holding just above the 89.206 low since March 2018. This is today's market news. Thanks for listening. We'll see you next time.